Fresh new month already upon us. Joining us right now to weigh in on the markets, Sylvia Jablonski, who is Chief Investment Officer and co-founder of Defiance ETFs. Also, Kevin Nicholson, who's the co-chief investment officer of Global Fixed Income at Riverfront Investment Group. And Kevin, I'm going to start with you because you've got some interesting thoughts about the Fed. Just with the departures we've already seen with Kaplan and Rosengren, you think that it might take some of the pressure off of Jay Powell to raise rates. Why is that?
Good morning, Becky. And yes, the reason I think that is because they were two of the hawks. When we look at last week, when the dot plots came out, they had 9 of the 18 respondents wanted to raise rates in 2022. We believe that 2 of those were Kaplan and Rosengren. So now I think that the Fed, when they replaced them, they were going to put doves on the FOMC committee. So therefore, I believe that this kind of takes some of the pressure off of Jay Powell from having to raise rates in 2022. It may move it back to 2023 because, Jay Powell really wants to be more dovish, and he's very methodical and wants to give the market more time. And so that's why I believe that this is taking some of the pressure off of him.
Sylvia, you agree with that just because this may be the biggest situation or the biggest influence on the markets, what the Fed's going to do?
I would agree with that. And I think, the longer term mantra for Jay Powell has always been, or at least in the last year, has been that the jobs number has to be back to where it was pre-pandemic. So we're not quite there yet. And, we have had these pullbacks and sort of fears, volatility, choppiness in the markets over the Delta variant. So I think that, once we get back to a point where jobs are stable, the inflation rate looks like it is actually transitory, the economy is getting back online, that's when the Fed may look to raise rates. He's been pretty vocal about tapering may start sooner, but I think rates are going to be put off for a while.
We have seen the markets pull back a little bit, Sylvia, and you think that even though most of the averages are down 5% or less, that this is a time that you'd actually buy in. You think stocks are going to be up for the last 3 months of the year?
I do. I think that we're going to finish up in the green. I think that September was a little bit of a ho-hum sort of month, as it typically is, but fundamentals remain strong. There's large amounts of liquidity in the market, trillions of dollars sitting in savings accounts or money market funds that, are pretty much earning zero. Fed remains accommodative. We're probably going to get some sort of spending bill on infrastructure. And companies are just flush with cash right now. They have strong balance sheets. And I think that that'll translate into CapEx. I think that will translate into hiring. Earnings have been stellar. So if that continues, I'm really bullish towards the end of the year. And when I look at some of the sectors that are growing, particularly like 5G, which is, I think, the biggest thing since the internet, if you think about the tech names and the semiconductor names that are, 2 to 17% off of 52-week highs, if you look at names like NVIDIA, for example, those are great opportunities to buy in.
And NVIDIA you also like shares of Delta. And I wanted to ask about this because we did have last week on CNBC an analyst who was saying she didn't like Delta so much because of the high debt that they're carrying at this point. That doesn't concern you?
It doesn't concern me because I think that they're well positioned to pay off that debt. They had positive gross margins in June. If you look at the PE on 2021 earnings for Delta, it's 10.9 versus American, which is 28, versus United, which is about a 14. I think Delta is really tethered to international travel. And with the announcement of borders sort of opening up, particularly in the U.S., I think that they're going to pick up a lot of their profits and generate revenues, which will allow them to pay off that debt. So I do think that Delta is a good value trade now. And just cruises, hotels, and airlines, well off of 52-week highs. It's still a good spot for that longer-term buy and hold recovery trade.